6 months of absolute, relentless military strikes. Thousands of targets completely destroyed. And yet, believe it or not, the real war is actually just beginning. Welcome back to The Explainer. Today we are breaking down the incredibly dramatic shift we're seeing in the 2026 US-Iran conflict. Because while the missiles haven't completely stopped flying, the physical battlefield has essentially been replaced by a brand new, absolutely devastating weapon: total economic strangulation. Okay, let's dive into this, because to really grasp the sheer scale of this new strategy, we have to listen to the U.S. Treasury Secretary Scott Bessent. He literally calls this the single greatest financial offensive ever marshaled against an adversary. The Trump administration has officially dubbed this moment Economic D-Day. And the goal here? It's not just applying pressure. We're talking about the comprehensive international isolation of Tehran. It is a highly calculated move designed to collapse the Iranian economy by completely leveraging the absolute dominance of the US dollar and global banking networks. They are severing Iran's remaining access to transnational commerce. The immediate, on-the-ground reality of this strategy is just staggering. Right now, there is a 350% inflation rate absolutely devastating the Iranian civilian economy. To put that into perspective, according to U.S. officials, this has led to a situation where Iranian soldiers and police officers are literally going unpaid, and the domestic currency is completely collapsing in on itself. The International Monetary Fund is already projecting a massive contraction in Iran's economy. So, this isn't just lines on a macroeconomic graph. This is severe, compounding economic pain that is fundamentally altering the daily lives of the entire Iranian population.
Now, you might be wondering, why does this matter to me no matter where I'm watching from? Well, here is why. Roughly 1/3 of the entire world's seaborne crude oil trade, along with a fifth of global liquefied natural gas, is caught directly in the crossfire of this. This whole situation centers right on the Strait of Hormuz, which is this narrow, incredibly vital waterway that acts as the primary artery for the global energy supply chain. So this economic siege doesn't just isolate Iran. It actually threatens to send massive, disruptive shockwaves through global energy markets, shipping logistics, and everyday consumer prices all over the world.
All right, moving into Section 1, the military stalemate and its diminishing returns.
Let's map out the chaos of the last 6 months to see how we got here. Direct conflict kicked off in February 2026. And after months of really heavy fighting, there was this brief glimmer of hope on June 17th when the Islamabad Memorandum of Understanding was signed, which hit pause on the violence. But exactly 60 days later, on August 17th, that ceasefire completely expired, leaving both nations operating with absolutely zero risk management framework in place. The diplomatic window just slammed shut, and it threw us right back into direct confrontation.
Now, what's really interesting about this is the objective military toll before the strategy shifted, because it was devastating on both sides. The U.S. launched over 1,450 strikes, successfully wiping out an estimated 85% of Iran's ballistic missile and drone industrial base. CENTCOM even reported it would take Iran a whole generation to rebuild its navy. But guys, this came at a really heavy cost. The conflict expanded globally, resulting in over 750 aggregate U.S. military casualties. The strain on resources was literally so immense that critical stocks of precision-guided munitions were depleted, and the U.S. Marine Corps even had to cancel its major amphibious landing exercise with South Korea just to keep enough forces available in the Middle East.
Furthermore, Washington found itself constrained by a truly overwhelming number: over $40 trillion in surging national debt. Trying to fund a protracted conventional war became incredibly difficult, especially with the November midterm elections looming right around the corner. The military and financial limits became painfully clear. It effectively forced military planners to advise the executive branch that, hey, direct kinetic strikes are just no longer the most viable path forward.
Which brings us to Section 2, the collapse of the peace deal and a failed ceasefire.
So the agreement in question was the Islamabad Memorandum of Understanding. It was a 14-point, highly volatile, temporary ceasefire. Interestingly, Iranian President Pezeshkian actually defended it as the best path forward to break out of that tense neither war nor peace situation. But it ultimately failed because, frankly, it was just a band-aid. It didn't resolve any of the core structural issues, like the mechanics of the Strait of Hormuz, Iranian nuclear concessions, or sanctions relief. And without a solid follow-on deal, both sides almost immediately started accusing each other of violating its terms.
The diplomatic deadlock is crystal clear when we look at the two sides. The Trump administration was demanding absolute compliance with non-negotiable preconditions. They wanted Iran to surrender 400 kilograms of enriched uranium, accept zero war reparations, and keep only one single operational nuclear facility. On the flip side, Tehran drew absolute red lines. They gave a total refusal of any structural capitulation and demanded the release of at least 25% of their frozen assets. The gap between these two positions, it was just way too massive to bridge.
Let's look at Section 3, blockading the strait and the resulting economic chokehold.
And this brilliantly illustrates the shocking reality of this new phase. Before the conflict, commercial traffic through the Strait of Hormuz was operating at its normal 100% capacity. Fast forward to August 2026, and that traffic had plummeted to just 4%. We are literally looking at a near-total shutdown of commercial shipping in the Persian Gulf. The U.S. strategy relies incredibly heavily on physically containing the strait to completely choke off Iran's oil exports, which of course is their most valuable product. And to enforce this, the U.S. military isn't just sitting back and watching. 68. That is the exact number of commercial vessels that have already been physically redirected by the USS George Washington Carrier Strike Group. The U.S. is actively deploying its naval forces as part of a physical blockade to intercept any ships attempting to access Iranian ports. They are fundamentally dismantling Tehran's ability to export crude oil.
But, as we know, a physical blockade is never quite enough on its own. The financial net has to be completely global. Treasury Secretary Scott Bessent laid out a very stark reality for the rest of the world, saying, "You are either with us or against us." The U.S. is leveraging incredibly intense secondary sanctions. This means they are going after third-party intermediaries, global banks, and literally any country still doing business with the Islamic Republic. A massive part of this is aimed specifically at curbing countries like China, who have continued buying Iranian oil by utilizing Tehran's sanctioned shadow fleet of tankers.
On to Section 4, the regional fallout and the impact on neighboring nations.
The reactions from the Gulf states have been remarkably fractured. The United Arab Emirates took super drastic measures. They suspended all trade with Iran and, shockingly, exited OPEC entirely to insulate themselves. That move alone has sent major shockwaves right through Dubai's logistics and real estate markets. Oman, on the other hand, is resisting this decoupling. They're keeping the dialogue open with Tehran to try and negotiate safe shipping corridors. Meanwhile, Iraq is absolutely terrified of a regional escalation, to the point where they actually deployed 3 army brigades to the Saudi border just to prevent any Iran-aligned militias from launching drone strikes on Saudi energy assets.
Of course, Iran is not just sitting by and absorbing all of this pressure. Tehran's Security Council is replacing lost scientists with a brand new generation, and they are fundamentally shifting their military doctrine away from defensive postures, moving straight into offensive gray zone tactics. They are tripling their domestic drone manufacturing, and most alarmingly, they are issuing direct threats of asymmetric strikes against the critical water and energy infrastructure of neighboring Arab monarchies if those countries support the U.S. blockade. Plus, they are continuing to force exports out using their shadow fleets. So, the crucial point we need to take away is this. The limits of traditional kinetic military strikes have birthed a terrifying new phase of structural attrition and massive geopolitical realignment. We are no longer looking at a standard war. This is a war of total economic attrition, where the primary weapons are inflation, naval blockades, and secondary sanctions. And right now, there is absolutely no clear off-ramp for either side.
Which leaves us with one massive, incredibly high-stakes question to consider today. As economic strangulation completely replaces military strikes, can the global economy actually withstand a permanent siege of the Persian Gulf? Let me know what you think down in the comments below. If you found this explainer helpful, make sure to hit subscribe so you don't miss our future deep dives as we continue tracking this rapidly evolving situation. Thanks so much for joining me, and I'll see you in the next one.